The next presenter is Tom Ward.
Recording in progress.
Tom Ward, and he is going to present to us from London. He's part of the Innovation Finance Lab of the UNDP, and in collaboration with the National Bank of Ethiopia, they are developing a Sandbox initiative that is going to be launched very soon between National Bank and the Capital Markets Authority. Are you ready, Tom?
Yes, thank you very much. Let me share my screen. I think pleasure to talk to you all. Thank you very much for the opportunity to talk to you all. I'll be very brief to talk about the role of regulatory sandboxes in promoting financial innovation. I'm Tom. I've been working on sandboxes and thinking about sandboxes for about last 10 years. I developed and led what I claim is the first regulatory sandbox here in the UK, and led that for a number of years. And since then, I've been working with countries around the world, helping them think about sandboxes and innovation and ways of promoting innovation in their jurisdiction. So it's an honor and a pleasure to be talking to you all today. Firstly, what is a regulatory sandbox? I think the concept is fairly well known, but just to describe it briefly. So a regulatory sandbox are generally designed to allow firms with innovative ideas. And when I say firms, typically they're smaller fintechs, but it can be large incumbents, banks, insurers who have got an innovative product or service, to test that product or service in the live market on real customers, and with specific limitations and safeguards in place. So rather than allowing the firm to test the product at scale, a sandbox will carefully define limitations. It may be time bound. So typically a sandbox test would be up to 6 months or maybe a year, limiting the number of customers. So it may be that the firm's allowed to test on 100 customers, 1,000 customers, or limiting in other ways different types of customers, friends and family, for example. So to allow the regulator to control that test, but to encourage the firm to get to market and to test their proposition and understand the commercial potential of that proposition. So very much designed to encourage innovation and to understand the practical opportunities, benefits, challenges of that innovation in the live market. Typically, the firms I've seen supported in sandboxes, the majority are smaller fintechs who have got an innovative business model or maybe got an innovative use of technology that they need some sort of regulatory intervention to test. So maybe there is ambiguity in the rules. Maybe that firm needs some sort of license or permission from the regulator. They're typically the models that we see in sandboxes around the world. The other, I think, important thing to say is I think there are great benefits for firms because it allows them to work closely with the regulator, get the regulatory clarity they need, and test that product in the market on a much more quickly than if they weren't in the sandbox. But I think there are great benefits for regulators too. So when I was supervising tests in the sandbox, you'd often see entirely new applications of technology in financial services where we as regulators, frankly, didn't know what we thought about them. I had a lot of blockchain tests. And so allowing the regulator themselves to understand the technologies, understand the benefits, understanding some of the risks, and then in some cases, creating the insight so the regulators can potentially amend regulatory frameworks, create new regulatory frameworks, clarify expectations to the market. I think they can be a great benefit for the regulators themselves. I also think, although sandboxes are generally seen as permissive activities and encouraging innovation, encouraging market entrance, which they absolutely do, I think they're very important as risk mitigation as well. So they allow the regulators to very, very carefully define the parameters in which a firm can test, closely understanding the business models, closely identifying the risks, and ensuring that firm has appropriate mitigation strategies in place so that consumer harm, the risk of consumer harm is minimized. I think that's a really, really important attribute of sandboxes that are sometimes overlooked. What is a sandbox not? So it's definitely not a regulation exempt space. I think a lot of firms that I used to speak to would think that it's some sort of safe harbor, and the regulations for a particular activity didn't apply. They do generally, unless the regulator specifically turns them off or disapplies them. It doesn't transfer risks onto consumers. The risks remain with the firm who is doing the testing. It doesn't offer bespoke set of rules, but what regulators can potentially do in certain circumstances is to design or create bespoke regulatory frameworks to allow a firm to test. But it doesn't automatically create a bespoke set of rules for firms. Firms will still have to abide by the rules that apply to that particular activity. And generally, they're not sector specific. And I think most successful sandboxes I've seen are very broad in terms of the type of firms they support, the sectors that those firms operate in. So it may be banking, it may be payments, it may be insurance, it may be capital markets. And don't tend to focus on specific technologies, although they can do so. I think the most successful sandboxes I've seen are very sort of market led, and the regulator takes a very wide berth in terms of who they support. Just very briefly, what are some of the benefits? So I've mentioned a few of these. So reducing time and cost of getting innovative ideas to market. So I think for the firms themselves, most sandboxes really expedite the amount of time it takes to get maybe it's the license or the regulatory guidance or the regulatory clarity that firm needs to actually get